What's up everyone, it's Arnold here. In one of my last videos I talked about how Robinhood halted trading of GameStop to meet the collateral requirements of a clearinghouse. And now the CEO of Robinhood, Reddit, Citadel, and Roaring Kitty are all testifying in front of Congress to explain the whole situation. And now new information has come up showing that we were dangerously close to entire financial system collapse during the short squeeze. So in other words, GameStop almost caused the collapse of the entire financial system. That is something I never thought I'd have to say. So we're gonna get into all that today, explain why we're so close to financial collapse, so let's get into it. To summarize the events, GameStop went up by over 500% just in January alone, and this was caused by an epic short squeeze. In essence, there was a lot of short interest by hedge funds on GameStop, and retail investors decided to buy up the available shares of GameStop, causing short sellers to cover their losses, buying up the shares, and in turn driving up the price of the stock even more. Subsequently, Robinhood and other brokerages decided to halt trading of GameStop in order to meet the collateral requirements of a clearinghouse. And that is because due to the volatility, the collateral went up by over 100%. So for every stock of GameStop that you buy, Robinhood and other brokerages have to front up 100% of the stock's price. And they were just not able to do that. If you want more detail on the situation, be sure to check out my other videos explaining this entire situation. So now that you're up to speed, how did this lead to the potential financial collapse of the entire financial system? So Thomas Peterffy, the founder of Interactive Brokers, one of the biggest brokerages in the world, had said that this epic short squeeze almost led to the collapse of the entire financial system. And this stems from the fact that there was a lot of short interest on GameStop from hedge funds, in addition to a lot of call options from retail investors. Now, call options is the bet that the stock's price would rise to or above a certain strike price. And if it hits that price, then it'll give you the right but not the obligation to buy those shares at that price. So for example, if you bought a call option of GameStop at the strike price of 200, if GameStop reaches 200, then you can buy stocks of GameStop at $200. If it goes above $200, hits 250 for example, you still have the right to buy GameStop at $200. So that's an instant profit of $50 per share. Now the issue is that if the stock of GameStop kept on rising, both short sellers and the brokers that fulfilled contract obligation from call options might not have been able to fulfill their contractual obligations. What this means is that because there were so many call options out there on the market, if these retail investors decided to exercise their call options, these brokers have to fulfill those obligations. Essentially, these brokers have to buy the stock of GameStop for the retail investors that exercise their call options. But if they're not able to meet the collateral requirements and they still have to buy the stock, then they'll default on the clearinghouse, which means that they're unable to fulfill a debt. So if brokers defaulted on clearinghouses, this will cause a huge mess and potentially ruin and collapse the entire financial system. It's a complete mess that's almost impossible to sort out. But you might ask, why did that happen? Why isn't the financial system completely in ruin today? Well, Peterffy said that it's because Robinhood and other brokers halted trading, thereby causing downward pressure on the price of GameStop. If the price of GameStop kept on rising, this might have caused a snowball effect enough to cause brokers to default on clearinghouses, thereby causing that huge mess. So he suggests regulatory changes that change the way that this financial system is organized, such that this hole in the system is plugged and this problem might not have to occur ever. So in summary, we were potentially extremely close to financial collapse, and it was lucky that the pieces didn't fall right in place to cause that to happen. So that's it everybody, that's how GameStop almost caused the collapse of the entire financial system and how we narrowly avoided it. If you learned something in this video, be sure to share this video with someone else that might find this helpful, and like and subscribe if you like this content. I'll see you in the next video.